So this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily pre-market analysis show, where we look at what happened during the market today and how we can plan for a better trade for the next day. So we had hell of a day today, right? The bulls hit back. Let's see what exactly happened. This is the chart. So let's just have the same chart that we were looking the other day. So this is the weekly chart of the Nifty, and here what you see is a weekly chart of the Banknifty. We had drawn its trend line channel also, and that's what you see here. So what has happened today is that from the weekly wise, if you see, we are still inside. We are close inside the channel. Banknifty, we are still above the channel, but still below the previous week high, we can say, right? So that's what it is, right? Let's get into details. So what exactly was the price action? Let's get into and see the charts itself first quickly before we look at this candle. This is a bear trap. It trapped the bears who thought that the market was going to fall down. Right? Look at this 20 moving average is beautifully supporting the market, and this is open is equal to low, clear bullish candle. And this is also a piercing candle. It is more than 50% of the previous candle, so it's a piercing pattern which is bullish in nature. And the only thing is the gap down from the previous day has got a resistance on here. It is not above that. That will be too ambitious to go above that. But look at Banknifty. It has managed to go above that. It closed the gap that was there previous to previous day, and also it is almost an engulfing bullish candle. Remember, we had an engulfing bearish candle 2 days back. Now we have an engulfing bullish, and this Banknifty candle also is clearly bullish. Open is a low pattern, bouncing off clearly from the 20 moving average. So nobody thought that the 20 moving average would give such beautiful bounce ups. Exactly what happened today. Let's get into the numbers and see. So this is for tomorrow, Wednesday, to August 24, one day before the monthly expiry for August, and we had a piercing bear trap and a bullish engulfing on both the indices, right? On Banknifty basically bullish engulfing, and the other one is bullish piercing, both bear traps, trapping the bears. Intraday it was kind of very choppy in the morning. It gapped down, then tried to, so in effect it made two V's, and after that it trended, busted out. Finally closed green, but not too much on the Nifty, 0.5% and 1% more on the Banknifty. That's what happened, right? So remember, we had made 3.4% correction in the Nifty and 4.4% on the Banknifty. That's a kind of correction that we had done before we bounced from the 20 DMA, and that is also a change in polarity which we discussed yesterday, right? So changes CIP, bounce the previous resistance, acting as support, and then bounce up. And if you closed the resistance zone that was created by the gap when it was gapping down previous days, but the Nifty is still below that, right? So that will be the first resistance that will be there. So trend line channel, still we have seen that it is inside the trend line channels as far as Nifty is concerned, and Banknifty is already, it was outside, and nothing much has come back toward. So it has moved a little bit. That's all right. So that's the price patterns. What they are saying is a big comeback. It will sustain or not is the question. Right? Support resistance levels, new support resistance is, gap resistance is there, which is at 711, 17,711. After that you have the 18,115 resistance on the upside. This for the Nifty, and 4160 resistance upside for the Banknifty, 4830 resistance second after that on the Banknifty again. Supports 17,467 is the first support, is the 20 DMA place to the previous swing low. Then 17,161 is also the next previous swing low, which would act as support. Similarly, the Banknifty 38,000 would be a crucial support, which is the previous swing low, and then 37,250 also can act as a support on the downside if it falls back again. So Bollinger Bands, what do they say? It says the same. There is a bend. There is a consolidation, there is a turning of the expansion, halt of the expansion, and then sideways move. Consolidation, but it indicates the bands. Yeah. So that may take, so it may not be a big crash that's going to happen, is what probably the bands are indicating. So when it comes to the momentum, we have the bullish momentum that is there now in both indices, And also we have divergences as well. The divergence is marked here yesterday itself, and it worked out beautifully today. We're talking about the momentum divergence, but the price is moving up and the momentum is coming down. It has taken a support, and you see that today it has bounced up. Beautiful, beautiful bounce. Now this can go up to here. So in effect, it says that it can go up to the 18,000 once again if it works out fully. Right? Same Banknifty also bullish divergence. This is known as bullish reverse divergence, which is basically indicating that it can move up to the close of that swing high, right, on the price. So that's about the reservoir resistances, about the momentum, and trend clearly bullish, no doubt about that. But the only problem is, no doubt about that, in the sense that it is not crossed over to the bear zones or the Demat. It is not from the ADX indicator point of view. But there is one thing that you have to be worried about, is it is given a bend. Even today also it is a bend on both the indices. So this bend indicate that the strength of the bullishness that was there at MA zone is slowly dipping. It also indicates that there could be a crossover that may be there. Sometimes the crossover may not happen and it can bounce back, or this bend can straighten. All this can happen. But you have to be cautious whenever you see a bend. It could prolong for some time, right, before the trend reverses back to the strength reverses back or straightens out, right? So India VIX is the volatility factor, which is high, very close to 20. That's 19.05. But it was flat today, more or less. Nothing much happened on the VIX side. Big spikes did not happen. Big cool-off also did not happen. That's what we have to. The market moves like this, we would expect some cool-off. That did not happen in the VIX, but still market moved up. So that indicates that there is something that may not, cool-off is fine, but the cool-off flat close is fine on the VIX, but cool-off did not happen is something that we have to be little concerned on the move. Cautious, that's all. So it may be probably cooling off tomorrow, but having this VIX at 90 level is not good. The futures open interest is showing long build-up back. Yesterday was long unwinding and short build-up and all that is there. Now both indices have got a long build-up. The futures open interest, that is today's build-up. Options data is showing what 500 points. So 17,000, 18,000 range is reduced to 17,500 point. 500 point where the support resistances that we can see where the highest put and call rating is written. Look at Banknifty 38,500 and 40,000, and this is remember for the expiry that's day after tomorrow. PCR has improved. It was 0.6, very far away from the bullishness. Now this is closer to the bullishness. PCR improved 0.8685 Nifty and Banknifty. Sector wise, if you see today, all the sectors except IT did not perform for some reason, right? IT was underperforming. Others are all close. Managed to close. Some of them flat, some of them. And FMCG and metal. No, FMCG and auto was there, so auto slipped to the sideways. So HMT and FMCG and the metal sector. FMCG is rocking. So these are the two sectors who are most bullish on the short term from the momentum perspective. Anyway, it's Reliance ICICI Bank, two strong stocks. They remain the most bullish in the short term perspective. Infi and TCS, the IT stocks, underperformed. So that's all flat. Interestingly, Fyers are not turning into selling at all. There's buyers, but not big, right? Small quantity buying has happened. This is not minus, this is plus 563 crores of buying has happened, while they has sold small. So Fyers in this buy mode is good, encouraging. The bulls still have the hop. The crude oil is rising, it's not good. Just climbed back to 90 plus. Sideways, but it's not good that it is rising. It had fallen down to 88, 87 kind of levels earlier. Dollar index also is rising, which is going near to 109, 10 all-time high levels, 20-year high kind of levels of dollar moving up is worrying, because the rupee is weakening. USD INR also has spiked up, but maintaining that below the 80 levels, 79.86 for the USD INR. So this dollar index is spiking is worrisome. Dollar crude not going further down below the 90 is also worrying. Buying is good. Gold is kind of crashing and falling down to the next support levels after it has slipped down from the previous resistance which it had climbed earlier. Unfortunately, it slipped below that. Now, two major indexes, SGX and the US indices, Nasdaq, all these things are in red yesterday. Dow Jones, S&P 500 all are in red. We'll have to see for tomorrow, all these indices tomorrow, how it perform today night. And then for our tomorrow morning, you will get a clue on if there is big moves like, but so it was surprising that the big moves that happened to the US markets in the Dow Jones of 640 points of something. It was red, and our market reacted to that. It gapped down, but recovered completely. So it is very surprising that the US market big moves are not considered today by our Indian NSE markets for some reason. Right? Normally it follows. Probably it had corrected too much, so fast that it didn't find that move in the US market qualified enough to react to. That's what we'll have to assume. Otherwise, US market 600 points moves, you should have gone down. We did go down, but recovered it completely. So that shows some strength in the retail and retail participation in our market and the institutional participation as well. Major events, it's monthly expiry day after tomorrow, August 25th. There is a Jackson Hole meeting or something that may comes on a weekend, and the next 29th, the next day trading day would have some implications on that. August 31st is again a holiday, so it's a truncated month once again. 2 picks long. Asian Motors has been our weekly pickups earlier. So long, it is breaking out, and then very good moves and good opportunity for some more on the swing. 1 or 2 trades for the next few days. It could work. ICICI Bank beautifully long. Banking index is long. Auto sector is also good. ICICI Bank is also having a couple handle pattern. Momentum is good. Trend is good. For what this is the momentum trend on the weekly and the medium term. Weekly and the daily charts are showing beautiful momentum and price patterns and trend as well. So that could give some rewards for short swing trades. So overall, the market view for me is mild bullishness. Yesterday it was mild bearishness. It did went bearish, but I could not anticipate that it would have such a big recovery that may happen after the downfall. So that view partially might have gone wrong as well. But for tomorrow, my view is bullishness, just because of the factor that we had a decent correction of up to 3.4 to 4% of correction after a 18 to 23 kind of rally. Now it may have some consolidation. After that, it may climb up. Pounds and the support that's going by the 20 moving average shows that there is a lot of retail money that is there. Retail confidence is there, which is looking at the market to further move is what indicates. FIs have not turned sellers in spite of all this, right? All the selling that happened from the profit booking is what I would like to understand. So the FI barring more momentum bullishness, divergence, piercing pattern that has formed today, the bullish engulfing, from the bearish engulfing, now it has become bullish engulfing. All this gives hope for the bulls, right? So my view naturally is as for the chart, what the price patterns in the charts and the momentum and all these indicators, what they combined to that, they show that there is still bullishness left in the market. But one thing that you have to cautious is the trendline channel. Only if there is a clear breakout sign that comes in confirmation of the Nifty on the weekly charts. If a close happens above outside that trend line that we have drawn on the weekly, only then we can say that it's a continuation of the rally. Until then, we may be consolidating, we may be zigzagging, we may not be going too much, is what I think, right? Mild bullishness for tomorrow. I hope this helps you to frame your trade plan and trade view for the next day. And this is for August 24th, Wednesday. Hope this helps. If you think that it has helped you some way, share it with your friends. Subscribe if you're not subscribed, and hit the like button and put in your comments feedback and all that. We have very few subscriptions and appreciate your help in this regard. Thanks a lot. Happy trading, happy learning, happy investing. Bye.